Yeah, good morning, everybody. You're welcome to today's morning market review. First of all, I really apologize for starting a few minutes behind schedule, and that's because we actually are trying to wait for a good number of people to formulate the participants of the class before we start up. How have you all been? Hope it's being a wonderful night. It was a wonderful night for you. Hope it's been a fruitful day for you. There's been a lot trading wise. I believe that it has been a profitable week for a good number of us, being that a lot of fundamentals that we can could take advantage of what happened this week. Starting from the majors, the CPI, the PPI, and a good number of other fundamentals that came out this week. And for traders who know how to take advantage, I believe that at a point we've been able to, take advantage of some of these fundamentals. A fruitful one it must be for, a good number of us that know how to take advantage. But then, should you have missed out, don't worry. We still have, Yorubas we say, "Orunto wanita otashogbe," meaning the sun outside is still enough for our clothes to get dried. The sun outside is still enough for our clothes to get dried, and that's what we'll be doing, helping you achieve this morning at the morning markets review. In fact, like I was talking to somebody that was yesterday. I said the best time one can actually actively trade is now. The best time one can actually trade is now. Looking at the economic realities caused by the removal of subsidy and other, economic policies since, all these things have been happening. You realize that it has caused food inflation, transportation. There's been inflation in the price of food, in terms of transportation, and whole lot. Even for those who actually do not take public transport, how much you used to fill your full tank is, it has doubled or tripled. And that is why I always tell people, I always say that income is static, expenses are skyrocketing, is a very, 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 wonderful recipe for financial problems. And that's why it's the best thing you can do for yourself right now is to actually activate every other additional means of income you can, so that as expenses are rising because of inflation, you can actually follow up. You can follow up with your income. And no, like some people normally pray. They pray that irrespective of the policies, it will favor them and their family. Some people have issues with that prayer, but then it's a very, very, very valid prayer at this moment, because at this moment, aside our personal doings, we need, the intervention of a divine, force. And that is why I would say, irrespective of those policies, it will favor you, your family, and everyone. Amen. So let's quickly look at the market. Let's quickly look at the market today. Let's look at the market. I would want to go have a quick rundown of what has happened. Yes, I would love to have a quick rundown of what has happened this week before we actually startup. I would love to have a quick rundown of what has happened this week before we actually now look at what is happening today. Because if we don't look at where we are coming from, we might not be able to know where to go. It's an African adage in different languages. If you don't know where you are coming from, you might not be able to know where to go. And that is why we'll be starting with a market rundown of this week, a market rundown for this week. I am in-house with a very wonderful colleague of mine who will be looking at different instruments. I've been seeing some messages as regards some certain instrument that some of you will want us to look at. Don't worry, we've got you. Those instruments will be looked at in the course of this meeting. So good. So we're trying to look at, let's hold on. Okay. So I believe that we've been able to look at, we're trying to look at, okay, fine. First of all, I would love to look at the dollar. I would love to look at the dollar. And that's because, a good number of us actually focus on instruments that has to do with dollar, starting from the currency pairs, USD, JPY, Euro USD, GBP USD, AUD USD, to the indices, US 100, US 30, US 2000, to instrument that have correlation with the dollar like gold and every other instrument that has a certain relationship with the dollar. So that is why we'll be looking at what has actually been happening with the dollar this morning or this week. On Monday, the dollar actually, it was quiet with the dollar, and that's because there was no major economic news. And on Monday and Tuesday, there wasn't any major economic news on Monday and Tuesday, and that's why the dollar was very it was quiet with the dollar. I think the major news on Wednesday came with CPI, and just as it was a mixed one. Why I'm saying it's a mixed one is because just as the U.S. economy or U.S. Fed Reserve has been expecting, they've been expecting that inflation will be toned down. And if you look at the CPI figures on Wednesday, for those who actually do not know what CPI actually is an inflation data that actually gives you the change in price of goods, a basket of goods, probably from last month and this month. So you understand? It's just like you carrying some basket of goods. For example, I want to look at for food. What is the change in price? What is the price of Gary last month? And what's the price of Gary this month? What's the change in price? What was the price of rice last month? What's the price of rice this month? What's the change in price? What is the price of palm oil last month? What is the price of palm oil this month? The change in price. And so by so doing, you realize that it helps you to get to know that, okay, fine, our prices of goods in the market, goods and services in the market, are they actually going up or they are going down? The prices of goods and services in the market, are they going up or they are coming down? So you realize that this inflation figure would help you to get to know, or this CPI figure will get to help you know what is the level of inflation in the economy. And just as the Fed Reserve has been hammering on, their goal is to actually lower inflation rates. And looking at the inflation data that came out on Wednesday, it actually came out negative. I believe that some people, there is always this mix by saying, what if inflation data is down? It's a good one. Then why is the dollar down? It's a very, very, it's a very, very common question. And what I would say is, when inflation data is down, you realize that a number of, there's an expectation for a dovish response. Hawkish responses always, from Fed Reserve, always boost the dollar. When we talk about hawkish response, I talked about increasing of interest rates. Now, this increasing of interest rate is tailored towards tackling inflation. But when inflation is down, you realize that it gives this projection that increment of interest rates will not happen. And increment of interest rate normally boosts the dollar. So it's just like a cause and effect thing. Now you realize that what should have given that, the cost that should have given that effects that would have strengthened the dollar is not there. So that is why whenever there is low CPI figure, it's a cause of the effect of the CPI is a cause. The CPI data is a cause to actually, create an effect of either increment of interest rate or leaving the interest rate that it is, or decrement of interest rates. Do we understand? Now, moving towards yesterday also, the PPI figure was mixed yesterday. The PPI figure, PPI figure came out bad, but however, the unemployment claims was able to actually, give dollar some strength, and that's why you realize that at the initial stage where the PPI came out, it actually boosted the dollar a bit, but then the weakness of the dollar caused by the poor CPI figure and also caused by the poor PPI figure was not able to able to overshadow the strength of the unemployment claims. And that is why you realize that as at yesterday, overall, dollar was still down. And I can tell you that today, dollar is still down. And that's simply because we have a number of economic data, we have a number of economic realities not working for the dollar right now. And that's why dollar is still down. And that's why, basically, if you'd ask me, I would tell you, pending the time we'll be having, this fundamental on Friday, I would tell you that in the long run, pending the time today, pending 3 p.m., we'll be having the prelim consumer sentiment. I will tell you that we should actually trade towards having a weaker dollar. We trade towards having a weaker dollar. And that is why, let's go back to our charts. That's why if you look at, hold on, please, let's go back to our chart. Okay. So that is why if we go back to our charts, if we look at the dollar index, I will tell you that the dollar index, if you look at the monthly run, it has actually gotten to the lowest it could get to this month. So this year. In fact, I can say that this is a 1 year low. 1 year low, because this point it got to the last time it's actually, crossed this point and it crossed it upward. This point was actually last year, May. That was, April last year. So should it break, it has actually gotten to an let me say a 1 year low, and dollar is still not looking as though it is coming up. If you check your dollar index, you realize that there's been some level of retracement this morning, trying to see that probably dollar is likely to pick up. But then, if we look at the realities as regards, the dollar, we actually might want to expect that dollar would actually be trading low today. And that is why, first of all, I'll be starting with what? I'll be starting with gold, an instrument that's actually trades inversely with the dollar. Now, if we look at gold, let's look at gold. Yesterday, gold closed bearish. In fact, I will tell you that gold has been closing bearish, and it's simple. Why has it been closing bearish? Just because of the it has been closing bearish because of the poor run of the dollar. Remember, we normally tell you that gold and dollar share this inverse relationship. Please, for the new guys who actually are just joining us, please note. Now, it does not mean that it is a vice versa relationship. Now, it's just a one-way relationship, that when dollar increases, you see gold coming down. When dollar increases, you see gold coming down. And then when dollar decreases, you see gold coming up. And that is why throughout this week, I believe you can see that throughout this week, the candles we have been seeing on the daily for gold has been bullish candles. It has been bullish candles. However, if we look at what is happening right now on gold on the daily charts, you realize that technically gold is actually bouncing off a certain rejection point, previous rejection point. If you look at this 23.6 fib level, you might be expecting what you realize that price actually has been rejected at that point numerous months that it got to that point. They have been made, this at this point has been major rejection point. Now, if this point has been, that's technically, but then when we look at fundamentally, or trying to look at what the dollar is doing, you realize that the dollar has been weak. We still expect that, okay, fine, gold will push up pending a change in fortune of the dollar. Now, this is a retracement caused by fund technicals. Having gotten to this point, you can see that price actually has been rejected at this point in previous times. Having gotten to this point, there is a level of retracement. But then I actually might not actually want to, might not actually want to enter excuse me. Okay, so like I was saying, we might, sorry, I think sorry for the break. So okay, thank you very, very much for. Okay, thank you very much. Thank you very much. I believe you can hear me now. I believe you can hear me now. Okay, thank you very much, Mr. Zion. Thank you very, very much. So I was saying that I might actually want to actually not enter a sell now. Looking at the fact that dollar index actually has been pushing up, but then I do not know, probably it's a minor retracement, or it's actually a way in the right direction as per a reversal that a good number of us have been actually, we've been actually expecting. And that is why I might actually want to enter a buy below this point, this rejection point. Below this rejection point, I'm actually want to enter a sell for gold below this rejection point, And should I actually want, on my 1 hour time frame, should I actually want to actually say, oh, I want to enter a buy, I'm looking out for a short buy above all these rejection points? Now you realize that these points, looking at this point, this 0.0 fib line, and this point are points I would actually want to wait out for breakouts. A point I would actually want to wait out for breakouts. These points are actually points I would actually want to wait out for breakout. However, should I want to enter a quick buy above this breakout point, I should be considering a certain resistance level. But then looking at the I would not want to say okay, fine, you enter the direct sell for gold. I'm actually want to say trade below this point, trade below this point, this rejection, above this rejection point and below this rejection point, trade below them. Do we understand? Okay, so let's move. That's for gold. Like I said, moving how will I say a quick recap on gold. I said gold actually has been going on, has been riding on the negative. Hold on. Okay, don't worry, we'll look at them one after the other. Gold has been riding on the negative run of the dollar, has been riding on the negative run on the dollar, and because of that, you realize that it has actually been pushing up. You realize that it has been an uptrend since the beginning of this week. Since last week, it has been on a constant uptrend. Now, this pullback is as a result of, number one, like I told you, if you check your daily time frame, I said getting to a certain rejection point on a daily time frame, it's actually getting to the rejection point. And Because of that, there might actually be a level of pullbacks. And also, the dollar is actually picking up this morning. But then, the dollar actually, we do not know if it's a temporary just retracement or the beginning of a certain reversal. And that's why we must be very much careful in whatever we want to do to ensure that at this rejection point, should serve as a guide for us to trade gold. So we want to trade gold below this rejection point below and below those rejection points above. So let's quickly move to US 100. US 100. US 100 is one beautiful instrument. It's one beautiful instrument that, reacts based on inflation, that reacts based on increase of interest rates and the likes. And why is it so? And that's because the way most of the component of US 100 are created, they are tech companies. They are tech companies. And, some people term it as high risk, companies with a potential for very beautiful success. So you get, and because of that, most of the times you realize that these companies, they actually borrow. Most of these companies, they actually borrow. And when interest rate is increased, it doesn't work well for them. And that is why you realize that if you look at US 100, that was last year. Last year was 2022, right? Look at, this is the beginning. Let's look at the beginning of 2022. Hold on. Okay. Good. This is 2022. Now, this is the end of 2022. So realize that from this point to this point, what have you seen? What did you see US 100 do? US 100 has been going down. It was a downtrend all through last year. And it was so simple. Last year, you realized that interest rate was increased repeatedly, constantly, and at a high level. Now, you realize that we had major 0.75% interest rate, that's 75 basic points interest rates. We had a number of 50 basic point interest rates. And this increment actually did not do well. It does not do well with US 100 and most of the stocks. So please, one thing you might actually want to get to know or note today is that constant increase of interest rate does not do well for US 100 and other stocks. When interest rates are being constantly increased, it doesn't do well for them. It doesn't go well for them. And that's why you realize that the moment interest rate increment was reduced, please, it might be confusing. The moment interest rate increment was reduced this year, what do you see about US 100? It actually was pushing up. It has been pushing up. And that's because US 100 thrives in a place or in a scenario where there are lesser interest rates. Now, before, I think last year, we were having 75 basic points. We are having 50 basic points. But throughout this year, I think I stand corrected. I think we've not had 150 basic points push in interest rate. I think what we're having is series of 25 basic points. So definitely interest rate was increased. However, it was increased in a lower manner. So it's like you giving somebody 10,000 naira for food before. From 10,000 naira, you started 10,000 naira, you were increasing it every month by 10,000 naira. January, you gave him 10,000 naira. February, you gave him 20,000 naira. March, 30. April, 40. You were increasing the money for food by 10,000 naira. So this year, things changed. And then you were actually increasing the money for food, but then you were not increasing it the way you were increasing it before. So it means that probably you were actually increasing it by 1,000 naira. So instead of 10,000, 20,000, 30,000, you are then now increasing it by probably 1,000. 11, 12, 13, 14, and the likes. So interest rate was definitely increased this year. However, it was increased in a lower manner. It was increased in a slower manner. And that is why I realized that this year, US 100 actually has been pushing up. Now, not just interest rates factor has actually pushed US 100. There were a lot of, inventions. We have AIs. This year. It is this year that we had the launch of AIs like ChatGPT. We had AIs like Bard for Google. We had a number of AIs for different purposes, and most of these tech companies actually are the one pushing for these AIs. This year also we had a lot of inventions, a lot of competitions. Thread came out this year. A competition for Twitter, and all these, all these innovations, all these inventions actually has been doing well, forward, has been making US 100 do well this month. And you can see that it's just remaining a bit for it to cover the sell for last year. It's about covering the sell for last year. It's just a point of, I think it has covered, yes. It's covered the sell for last year. This above, I think it has covered, it's really covered the sell for last year. Here, understand, covered the sell for last year. It says someone said a flying car has been made. Well, let me honestly say that I actually have not heard about that. But if that is correct, if that is actually the reality, a more win for what? For US 100. And also a lot of a good win for US 100 and other of these stocks that have all these tech companies involved. Now, why am I hammering on US 100? Because US 100 have a good number of tech companies. Please note, US 100 has a good number of tech companies. They have other They have other companies that makes them up. However, they have more of tech companies. US 500, they have other companies, but then it's made. I think it is dominated by energy companies. You get, and that's why sometimes when you see probably a break in oil, you might see it affect US 500 more. So again, if China is actually if something is happening in China, looking at the fact that China is one of the major countries that actually do well in terms of consumption of all these energies. So again, you realize that it is actually going to affect US 500. So for US 100, let's look at US 100 on a hourly. Now, like I've established the other time, I said US 100 dwell well in a place where we have it dwell well in a place where we have a lower interest rate, or interest rate not being increased, or interest rate increased in a lower manner. So again, it is not being increased. Oh, thank you very much. Thank you very much. I think I will actually read on the flying car. Thank you very much. So on lower manner. And that is why you realize that on Wednesday, you realize that starting from Wednesday, when CPI figures came out poor, and it gave a projection that future-wise, they might be constant, there might be a bit of there might be a consideration in future increase. There might be consideration in future increase. The reason why they are increasing interest rate because of higher inflation figure, because they want to actually manage inflation to a certain number. But if inflation is now coming down, just like we had on CPI figure on Wednesday, if inflation is now coming down, then there is no need to actually say you want to massively increase interest rates, or for you to actually have future projection of massive increments. And that's why you realize that after the news came out, US 100 actually has been going up. It has actually been pushing up until it got to a certain resistance level. And I expect that, okay, for today, it's been ranging. Probably it might actually pull back. Do you understand? It might pull back and then continue to what? Excuse me. It might actually continue to go up. But then I'm actually want to look at this zone. Probably towards the low of today. Looking at the fact that price has been rejected at this point today. So should price then break towards this point, I might be looking at it selling probably towards this 23.6, towards the low of today. Yeah, I'm looking at a sell, a minor pullback. Looking at the fact that what the USD has been doing, it actually has been pushing up. And do not forget that your US 100 also, try to do the opposite of what dollar does. It tries to do the opposite of what dollar does. And that is why I'll be looking at what I might be looking at a sell. I'm looking at a sell, but fundamentally, still riding on the weaker dollar, I might be looking at a buy above this weak resistance. I'm looking at a buy above this weak resistance, and that's because the dollar has been down, and also the sentiment across the CPI data, which is still affecting the market. You understand? And I think I explained to you why, future projections of increments in interest rates, future projection of lower increments in interest rate, how it affects US 100, and by extension US 2000. So for US 100, I said we might actually want to consider a buy above this rejection point, which forms a weak resistance. We might actually want to look at a buy above this resistance, which acts as this rejection point, which acts as a weak resistance. But then I'm looking at the fact that we are expecting a certain level of pullback, but then we might actually not want to enter immediately. We actually want to be sure, and that's why I might actually want to cover this range. Hold on. I actually want to cover this range. Hold on. So I actually want to cover this range, and then probably with good lot size. But then for should it break this range, this 23.6 fib level, I'll definitely know that, I think it's actually heading towards a level of reversal. So let's quickly look at US 2000. US 2000 actually is having the same shape with the same pattern with US 100. And look, I've told you, I said, see, most of this instrument, they do well when there is a future projection of lower interest rates increase, or when there is a pause in interest rate, when there's a pause in interest rate increase. They do well. So again, they do well. So that's the same thing that's happening to US 2000. The same thing happening to US 2000. You can see that US 2000 has gotten to a level. If you look at it, it's gotten to on 1 hour and on 4 hours, it's gotten to a resistance zone. Check it, and hence the rejection. And that is why it's been it's trying to consolidate. Then I expect that probably this consolidation might just be for a while to push up or to push down, and that's why I might actually want to wait for a breakout above these consolidation zones. Now, above the 0.0 fib level, I might be looking for I'm waiting out for a buy above the 0.0 fib level along this zone. However, it's a very, 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 very risky one because of the fact that there's a resistance. So probably should I want to actually remember, my screen is wide now. That's why it's looking as if it's far. It's not far. Probably above the proven resistance, we might actually want to consider a buy. Not above this 0.0. Above this proven resistance, we might actually want to look at a buy above. Again, above this excuse me. Good. Above this resistance point, we might actually want to be looking at a buy above this resistance point. And then probably to be on a safer level, I would have said probably a sell. Hold on. Let me widen my screen. Okay. I might be saying a sell below this rejection point. This I might say if you might actually want to enter a quick one, which is can be less conservative. A quick one, like less conservative, probably below this rejection point. Below this, and probably take quick before the untested support. Again, so probably technically, should the pullback actually get to this level, we actually want to look at a quick sell before that untested support. But basically, before the fundamentals for 3, the realities as regards US 100, as regards US 100 and the dollar would definitely be based on technicals. Before then, and what the dollar is doing. Remember we said the dollar is actually pushing up, and hence you realize gold is actually pushing down. You get gold is pushing down, US 100 is actually pushing down technically, and also based on what the dollar is doing. But then overall, I still see the dollar being weak. I still see the dollar been weak. So let's quickly look at US30 by popular demand by Mr. Great Godwin. US30. Now, US30 also, like I said, it's just that US30 as at yesterday actually, consolidated for a good number of a good number of hours yesterday. There was this ranging movement. There is no and what we are waiting for US30 now, it's a breakout. Yeah, what we're waiting for US30, it's a breakout. Now, still riding on the same momentum as US 100, US 2000. Like I said dollar is down, and that's why I will still be looking at the buy for indices today, except probably something changes the fortune of the dollar. Something changes the fortune of the dollar, which might be the consumer sentiment fundamentals coming on today by 3 p.m. Coming up today by 3 p.m. And that's why I'm actually be looking at for a buy this morning, more on US 30. But then probably I might be looking out for a sell below the low of today. I'm looking out for a sell below the low of today for US 30. I'm looking out for a sell below the low of today. Hold on, please. Let me quickly try to. Okay, I'm gonna be looking at the sell before the low of today, and the sell might be up to this 38 point. So our first take profit might be up to this 38.2 fib level. Then should it go further, I might actually want to continue with the sell. However, I am with the bulls this morning. Like I explained this morning, I said the reality is as regards inflation. I think I don't want to be Powell this morning. I don't want to Powell and the Fed Reserve this morning, because truly it's quite dicey now. It's very quite dicey. And that's because before the inflation data came out, they had come out to say, every one of them had come out to say, you know what, we paused interest rate increase in June, but now we are going on out to what? To further increase. And don't forget that the reason why they paused interest rate in June was because of the fact that they felt a number of interest rate increases beginning to have negative effect in the economy of the US. And that's why you realize that they had some banking issues where some banks fold up in the US. And then just to stop further, negative implications of the further increment, they had to just add a pause in June with the hope that by July, they would actually go all out to continue with the increment. But now, they're having a lower CPI figure, which shows that inflation is actually, coming down. And then it now comes to the dilemma of we are actually considering not pushing it too much to actually affect recession. Now inflation is coming down. Do we still move forward? But then I think we await the next FOMC meeting for that to be discovered. But please do not just have this, before FOMC meetings, we always have this expectation. Don't be carried away by that expectation. Anything can change. Do you understand? Anything can change. But then, like I said, I'm still expecting a bullish run forward for US 30. So actually, I might want to look at, should it break this on 3.6, just like it has been doing before yesterday, at least it will get to this untested resistance. So I'm actually want to look for a short buy. Like I said, less conservative. But if you're looking at a more conservative buy, you actually want to look at above this untested resistance. I want to look above. So I believe that whatever makes it break this point would definitely move towards the untested resistance, then probably pull back or then push up. So far so good. We've been able to look at dollar index, gold, US 2000, US 100, and US 30. So by demand also, I think we're still going to look at currencies. Right? There's a boss of mine in the office who is actually going to be looking at currencies. Yorubas will say what it means is the biggest of the masquerades is that which comes last, right? So my boss is here and I don't want to miss it. When she tells you to enter the market now, please enter, make money for it. When she tells you leave the market now, leave the market. These people are authority. When I mean authority, they are authority. So let's quickly move to look at D30 before we then move to currencies. And then I round up with oil. We'll look at currencies, a bit of currencies, and then I round up with oil. Let's look at D30. D30 also has been pushing up has been on an uptrend, and the beautiful thing now, let me say, about DE30 is that of recent, DE30 actually has stopped being the, in quotes, evil spirit that it used to be. What do I mean? Now look at this. Throughout last week, DE30 was selling, and it was just one way, unilateral, unidirectional, please. Unidirectional. And it's actually what, if you look at it, it actually sold from this untested resistance down to this untested support. And this week, you can see that it had covered the sell to this point, this untested resistance. So what I feel is there are two things can happen. It might be a minor pullback or a continuation of what it did when it got to this point. Do we understand? Of what it did when it got to this point. But then the realities as regards the components of DE30 and the Eurozone in the Eurozone will help us to actually look at the future of DE30. But for now, technically, I'm actually want to look at a sell. I actually want to look at a sell technically. Yes, I'm looking at the candlestick formations that I'm actually having, this present candle and the last candle that was after this level of consolidation. I might actually want to look at a sell, and probably I'm looking at a sell. Hold on, please. I'm looking at a sell at I think it might be an immediate sell. At the moment, it's an immediate. I want to actually enter an immediate sell on D30, and then, but then, please don't get too carried away. It might actually, continue with the trend. Remember, throughout this week it has been an uptrend. Figured. So if actually we're going to be trading this retracement by entering an immediate sell on D30, I might not want to be long. I might not want to be long. So I actually want to enter an immediate sell with a good lot size. We don't need to actually, stay in the market for so long. But then, should you want to buy, please aim above this untested resistance. Aim above this untested resistance, because that untested resistance is a very, very strong point for what? For rejection, price rejection. So you might actually want to buy above the untested resistance. But for D30, I'm actually want to look at an instant sell, looking at the pullback it's getting now and the momentum, the candlestick formation for D30. So D30, we'll look at instant sell, and then we would actually take our profit at a preferred point. So with that, I think I will move to my boss to continue with currencies. Please just stay tuned just for a few minutes while she takes over the screen.
Good morning, everybody. You're welcome to the second half of this class, if I am to put it that way. So this morning we are talking about, because of the first person that already spoke about USD JPY, we're going to be looking at it this morning. We all know that USD JPY is one instrument that follows the movement of the USD. JPY, in as much as in the Asian zone, is a strong instrument, is a strong currency by itself. But comparing it with the USD, we find out that it's kind of a weak instrument. That's why I will always tell persons, do not trade USD JPY anything against the dollar. Like, for example, the news comes out bad for the dollar, and you say, oh, because I'm trading USD JPY, I'm going to go the other way. No, wherever the dollar is going to, please head towards it with it. And last week, when I was speaking to some of my colleagues, I was telling them that the whole of last week, that wherever the dollar went to, that's where the other instruments that they are paired with, that it is paired with, went with for the whole of last week. And it's still going on that way this week. And you see a very, 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 very clean sell trend on USD JPY. For the whole of last week, USD JPY has been on a downward trend. Starting from when Monday was 7th, right? Monday was 7th, and from 7th, even from the whole of last week, USD JPY has been on a sell. And this morning, the USD JPY only came up a bit this morning because of what happened yesterday with the dollar. Because as much as, just like my colleague has said, as much as the Federal Reserve, they are increasing interest rates, but now the increment of the interest rate has come to kind of speak against them, because the inflation from the data that came out yesterday from the producer price index also showed that the interest rate has reduced. Even though we had like two news that came out yesterday, unemployment claims, I'm sure unemployment claims and the PPI, they came out contrasting each other. So that's why traders in the markets yesterday, they were kind of surprised. How is it that normally it came out bad for the currency? It's supposed USD is supposed to sell normally. USD is supposed to sell, but you see the USD not really selling as much as it's supposed to do, because another news came out that contradicted that news. So I tell my client that whenever there is a news, maybe two news coming out from the same zone, and one is good and one is bad, you are supposed to leave it. Do not trade anything. Allow the effects of the news to calm down before you go and trade the news again. But most persons were calling me, oh, Julie, what happened yesterday? Even though it came out very bad, because I was actually praying for this PPI to come out, opposite of CPI. But I know that over time, CPI and PPI has always gone in the same direction, because if the price of producers reduces, the price of consumers will obviously reduce, even though the producer price index doesn't really carry so much effect. But unemployment claims came out yesterday too, and it came out positive for dollar. That was why that long candle of sell that we were expecting yesterday from the market didn't really happen. So, and this morning, the Japanese yen against the dollar is kind of lifting itself. Anybody that knows me or my client knows that I love using the support and resistance. The Fibonacci is a very, very good retracement point. I love it, but I love using the moving averages, because moving averages, to me, just like I tell people, every trader have the way they analyze the market and the way that works for them. I love using moving averages and support and resistance. So for this morning and for analysis on currencies, we are only going to be looking at moving averages. So looking at the moving average, this is a 50-period moving average, and this is a 5-period moving average on this USD JPY. So the 50-period moving average is serving as a dynamic resistance to this price. And because of that, I would have said, enter your sell or enter your buy, because I believe that technically this morning that this market is going to push up, because as much as whatever it is that happened yesterday happened with the dollar, even though the dollar have not really hasn't really done anything that will make it is dollar going to move up, is going to move down today. Nothing is happening this morning to show that fundamentally that dollar is going to buy. But we have a news by 3 p.m. which on a normal day doesn't really move the market. So I'm going to be looking at this market technically this morning, basically all the instruments, because I've been searched on investing. There is nothing tangible that is going to change the course of this market this morning, except looking at it technically. So when you look at it, the 5-period moving average is under the candle, still giving us the direction that this is going to be a buy. But the 50-period moving average is is on top of the candle, showing you that it is acting as a dynamic resistance. So what are we going to do? Even checking 4 hours time frame, you are seeing what is happening this morning. Technically looking at it, this market is supposed to buy, but not now. But not now. When you're analyzing the market, there's a lot of things you are supposed to be looking at. Now, in 30 minutes time frame, you see that these two moving averages are already forming what we call a golden cross. They've already formed it on moving on the 30 period moving average, on the 30 minutes time frame, I mean. Now, the 50 period and the 5 period moving averages have already formed a golden cross, but we're not going to be acting on that golden cross now until we have a direct response, a very, very well-formed response, if you're going to put it that way. And how are we going to do that? You have to know that, to also check whether the support and resistance is supporting this formation. And because of that, my entry for this morning is going to be way above these moving averages. I am going to be entering within this zone. Let me show us the zone that I'm talking about. Within this zone. So I want the market, the candle, to break comfortably above this moving average. If the candle can break comfortably above this moving average, you should enter your buy on USD JPY. That is, if the USD is the one moving it, because whatever the JPY does this morning, the USD is going to still drag down its effort. And the same thing happens for the sell. If the market goes down and breaks this 5 period moving average, you should look at entering your sell. So I tell people that as much as you're analyzing the market, it's not immediately you analyze the market that you should enter in it. It is not a must. It is not a race between you and anybody. So this zone that I have marked, if price is able to move past it and move up, even in 30 minutes time frame, we'll see that it is still a good place to enter our buy. In the 4 hours time frame, we'll also see that it is a good place, because as much as the 50 period moving average is at the top, on 4 hours is way high. So we're not going to wait till when price breaks this thing on 4 hours before we go there. So that's the reason why before you enter any market, you should check your time frames and know where is a good time to enter. So in our 1 hour time frame, this is a good place. And for the sell, if this candle is able, if this support and resistance, if this dynamic resistance that the 50 period moving average is acting as this morning is able to hold this candle and make it go down, you should enter your sell below the 5 period moving average. For people using a phone, please go to your phone and click on the F plus and bring that moving average, change the number to 5, so that you know where I am telling you, because most times people tell me, oh, I'm using a phone, how am I going to do this morning? With your phone, you can also make use of the market and be able to make use of these moving averages and make money for yourself. That is that for USD JPY. Then going to Euro USD, I love Euro USD a lot because it is an instrument that doesn't really follow one trend for a long period of time. But this trend, this Euro USD, this is the highest it has gotten since April 2022. That is, if I am right, I think March, April, May. I think it's April. If you check back, for you to just reduce your chart, reduce it and click here, you drag it down and you see the last time that price got here. Okay, it was in April, late April 2022. That was the last time that price got there. So you see that whatever is moving this Euro USD today, and the only thing that we know that is moving Euro USD, because even their economy, Eurozone, is nothing to write home about. Their stocks are not so doing well. Their economy is not so doing well. So it is the USD that is moving the Euro USD for this week and making it to move up. So for today, we are going to be trading the Euro USD technically again, because the market is not making any sound this morning. There is no fundamentals, just like I've said. I think I'm already repeating it again. So all the currencies we are going to be looking at this morning is we are going to be entering it technically. So technically looking at Euro USD, anybody in their right senses. So yesterday, a colleague of mine, we were discussing about this market, because in the morning, every time we discuss about this market, because for us to have a better understanding of this market and know what to tell clients, when a client calls you and say, oh, account manager, what do you think is happening in this market? You don't just tell them you don't know, because that is not how we operate. We must know what's happening in the market. So yesterday we were dragging it. Do you think EURUSD is going to sell? Some people were for the sell, and they gave a very, very beautiful reason why they were supporting the sell. I was of the opinion that EURUSD was going to buy, because I told them, just like we all know, that PPI always, all the time goes the direction of the CPI. And because of that, even this morning, I believe that as much as this 50-period moving average is acting as a resistance to this price, I believe that EURUSD is still going to push up this morning before 3 p.m., even though the news is not really going to do that. But technically looking at it, EURUSD is supposed to sell. Technically looking at it, EURUSD is supposed to sell. So for this morning, we are going to be looking more at a sell on EURUSD than a buy. Even though I believe that it is going to go either way, it's either he buys or he sells. And technically looking at it, is definitely going to come down a bit, at least to this 50-period moving average. So, but we're not supposed to enter the sell now. Neither are you going to enter the buy, because some persons will see this buy and say, hey, yes, I think this is it. Let me enter my buy. And when they enter their buy, they are not seeing that the 5-period moving average is on top of this candle. It is on top of this candle. You understand? So because of that, we're not going to be entering immediately in the market. We're going to wait. If this moving average, if this candle closes, this forming candle now, if it closes below the wick of the last candle, enter your sell. If it closes below the wick of the last candle, I'm trying to enlarge this my triangle. Okay, if you close it below the wick of this candle, enter your sell and make sure that you leave the market before this 50-period moving average. Make sure that you leave the market before this period moving average. And for the buy, anything above the wick of the highest candle, enter your buy. So for today, the market is going to be trading technically, and I believe that whichever direction that EURUSD is going to go today, we're going to make money from it. So be vigilant if you want to trade EURUSD. It's not going to take so much time. For the scalpers, they would have made money. But scalping is not for everybody. Scalping is not for everybody. So if you do not know how to scalp, please stay in your lane and continue. You see what I'm saying? On 30 minutes on 30 minutes time frame, you see that the 50 period is above this my entry. So this my entry is still in order. Within this zone, you should enter your sell. And for the buy, if the market is or the candle is able to break this weak resistance, please enter your buy. Okay, somebody is asking me what is scalpers. Scalpers are people that do not wait for the market. They are not people that go to 1 hour time frame and analyze and wait. Okay, like what I am doing now, they don't do it. What do? They go to small time frames, like 5 minutes. And as the candle is like, as this one is forming now, they will enter a buy. And within minutes, seconds, they would have made money. So they don't care where with the direction the candle is going, so long as they make money during the movement or the formation of the candle. So if the candle is forming, if it's forming as green, they enter a buy. And before that candle will even think of going to sell or closing, they would have come out. So scalpers are people that enter the market in the lowest time frames and make money with the formation of candles. Those are the people that we call scalpers. Okay. So that is that for EURUSD. Going down to GBP/USD, I think after GBP/USD, we're going to be talking about going to AUD and NZD/USD, and that will be the end of our review of the currencies. Almost all the currencies paid against the dollar are doing practically the same thing. So the same analysis for EURUSD applies for GBP USD. So wait for price to break below the wick of the candle, of the last candle. Wait for the price to break below the wick of this candle. This is my zone. Enter yourself. If I put the moving average, you still find out they are basically in the same lane, practically in the same lane. Because all of them, nothing is moving them. They are just there. They are going the direction of the USD. So it's the USD that is dragging them down now. So if you even go to look for news on GBP USD, like nothing is happening in that zone. They are battling inflation up and down, looking at ways to increase their interest rates. So you see, for this morning, we'll still be looking at, seeing the dollar being the one that is, doing practically all the work for these brothers. So I've adjusted my entries. For the buy again, please use the entries above the weak resistance, but I believe that they are going to sell. If they get to this weak resistance, they are going to sell, because there is no news again. There's no news from the USD that is moving the market for this morning. So going to AUD USD, the same thing. NZD USD, the same thing. So you see, my analysis for GBP USD, for Euro USD, and for USD JPY, okay, USD JPY is different. Euro USD, GBP USD, you should use them to trade any instrument paid against the dollar for today, especially the ones that the dollar is the base currencies, like Euro USD, GBP USD. So for this morning, my this thing for my preference for this NZD USD is going to be a buy. But the buy will be within this zone. Do not, for any reason, be caught in this market above this tone code. So I'm going to, be entering my buy for NZD USD here and my sell below the tone code support. Below the tone code support, that is where my sell will be. My moving average is 50 and 5. You can also use 50 and 21. Use 21 and 50. Like let me use 21 and 50. Let me use 21 and 50 period. So you see, 21 moving average is on top of this price. So that is why even before I put the moving average, my entry is on point. My entry is on point. So if this market will break this 21 moving average and go up, enter your buy till this tone code resistance. So the last one we are going to be looking at is NZD. We are not talking so much about these currencies now, because when you check the market, there is nothing really moving the market this morning that is going to say, oh, even though the dollar is going this way, that the NZD is doing this, or the euro is doing this. I've checked this morning, nothing is happening. So we're going to hold on this morning till when something starts happening. So tone code resistance, for those using a laptop, you see it here, see tone code support. So tone code support is previously a resistance, but price has broken over it. Anywhere you see tone code support, know that that place was previously a resistance. If you see tone code resistance, know that that place was a support before. So now this tone code support was a resistance, but you see price broke it and went up. So for AUD USD, wait for this price to break this resistance, verify resistance, before you enter your sell. You see that the whole of yesterday, it has been consolidating between these zones. Please do not be caught within this instrument. If these ones are not working for you this morning, look for other instruments to trade and make sure you trade. That is a must. Make sure you trade. Do not be a trader and a day will pass, you don't trade. As busy as you are, even if it's in the evening, make sure you trade. Trade with reasonable lot size to be able to make money for yourself. If you don't have so much money in your trading capital, your trading account, increase your trading capital. I always tell people, the higher your trading capital, the better trading opportunity you get. Do not waste your time on demo accounts. Highest 1 week, 2 weeks, you should be out of demo. Some people, they will stay in demo for the longest of time. Like, what are you doing there? You are afraid. You are afraid that you're going to lose your money. Why are you so much afraid? In this life, if you're not willing to take risks, then you're not willing to make money. That is just how it is. So my colleague has done a wonderful job this morning telling us about the indices. I'm sure there are better places to enter trade. For currency trader, take note of my analysis this morning and you'll be able to, be fine. I'm sure today is going to be a very, very, money-filled day for people that will be trading. Don't join this class finish and you don't trade. Let us have a very, very wonderful day. Oh, oil. Oh, oil. Somebody said oil. Okay. So, okay.
Okay, welcome back. Okay. So welcome back again. So I said the other time, I said I would once she finishes, I would look at oil. And if we look at oil, hold on. Okay, let me bring my chart for oil. Yeah, so if you look at oil, you realize that oil has been moving up, has been bullish for quite some time now, and different reasons have been making it go bullish even till yesterday. And I still envisage, even though it has gotten to a resistance point, I still envisage a further buy on oil. Fundamentally, looking at the fact that one of the things that actually push the prices of oil are fundamentals. Okay, again, one of the major things that push oil. Oil is an instrument that actually focuses on interactions between demand and supply. Okay, again, and looking at the realities as yesterday, I think yesterday there were some shutting down of some Libyan oil fields yesterday, and that was because I think they were protesting the kidnap of one of their ministers. Okay, again, so the second largest, oil field, that Sahara, was shut down yesterday by protest by the local tribes. And also in Nigeria, you'll be surprised that we actually affect the price of oil globally. Yes, in Nigeria today, you realize that I think there was also a stop in the production of oil by Shell in one of their certain oil fields. Again, there's been some production cuts, and the truth is, whenever suspended loading oil, because of suspected pipeline leak, in Nigeria. So when you realize that all these things actually would affect supply, all these things will affect supply. Not to forget that, Saudi Arabia and Russia has actually talked about, supply cuts, that they are actually, cutting supplies. So again, to actually, allow for tighter markets. So within all these realities, I'm still looking at, a short supply because of the fact that, the stance of Saudi Arabia and Russia to cut supply, the issue surrounding oil in Libya, and also in Nigeria. Based on all these things, you realize that supply will be very, very much reduced and demand will be increased. And coming against the background of China, reopening their China reopening their economy fully. So realize that there is more demand, there is less supply. So for today, we actually want to be looking still at a push up on oil. But having gone to this resistance, technically, it might actually see some level of retracement. And definitely, I would always want to enter oil above this weak resistance. Should I want to enter oil? And with this, we've come to the end of today's morning market review. Thank you very much for staying tuned. Join us same time on Monday as we bring you the realities concerning the market for next week. Enjoy the rest of the day.